Hello everyone. So it's that time of the month again where we are able to compare our results with the hedge funds index. So for those of you who haven't seen one of these updates before, basically because all our trade alerts are for stocks and ETFs, we compare ourselves to a index of hedge funds which are long and short strategies. So the long short hedge fund index, and it's the index which is calculated by barclayhedge.com. So if you haven't checked that out before, I recommend you do so. Anyway, without further ado, let's get straight to it. Now, remember that all of these trades have been called live, either on my site or Twitter. So there's absolutely no possibility that I could have fudged the results or anything like that. You can have a look at my Twitter feed. You can follow me even, backtest_wizard. Or just keep an eye on the blog, and you'll see that every trade that we place has been, all orders have been given before the event. You know, there's none of this hindsight trading goes on. Um, Anybody who tells you that you're going to make lots of money trading, who can't actually prove to you that they can call trades before the event, you really want to steer clear of them. I'm all about 100% transparency. I'm not going to lie to you. You know, I have losing months. Trading's a tough business, but if you follow a specific set of rules, which you know have a positive expectancy, then you know you can make a few quid. And at the end of the day, that's all we're trying to do. So anyway, without further ado, first of all, if perhaps we check out the our yearly performance so far. So what you've got here is Backtest Wizard live ETFs and stock trades, and down here you've got the Barclay hedge funds long short index. And what I've done is I've just tabulated them in this graph, and as you can see, we are strongly outperforming the hedge funds. Now, there are many reasons that could be, which I've actually written about. Now, I will be completely upfront with you. Most of these profits came from two trades. So we had a fantastic trend following trade in a biotechnology company called Prana, which I wrote about on the blog. I think it was sometime in August now. Yes, it would have been. So, you know, we made 7% roughly just on that one trade alone. Now, I should remind you that every trade I place will be, the maximum risk will be 2%. The vast majority, I only risk 1%. Occasionally, I risk 1.5%. But anyway, you can see here, if we started the tax year April, obviously, if you started with $100,000, you can substitute that for pounds if you're spread betting. You know, it's really depends on the country you are. The important thing is the percentage returns. Okay, so we're currently sitting at 18.67%, and that is from closed trades. Okay, so that's banked profits. There's no paper profits here. The reason we're minus 448 at the moment, this obviously we're still in October, and I've closed 4 trades. I'm trying to think now. A couple of those I made $500 and I lost $1,000 on a couple as well. I tend to forget now exactly what happened, but we're actually in 8 live trades though. So let's get straight to my Backtest Wizard live trade list. And here we go. So the first trade was, we've been in BT since August 20th. Now, it was an outside bar in our buy zone counter trend trade, but with the main trend, you see. So we took half the position off, $500 or £500 rather. It's a British stock at 343. So the blue line was our entry, 343 was our target. We took half off up here. We're trailing the stop now, 14 pence away from new highs. Nearly stopped out a couple of days ago, but we weren't. So we're still in that trade, and we're looking for that to go higher. Now, a couple of days ago, we got long SGG, which is the sugar ETF. So this one, we bought it at 63.10. Again, it's where the blue line is. Our initial stop loss was down here at 60.19. Now, this is a trend following trade. So this is one of the trades where obviously we're giving it more room, and we're risking 1.5% on these trades. I don't need to go over the rules again because you are already familiar with them if you've seen any of my trading strategy videos. So it's the trend following model though. And basically we're just trailing the stop now, $2.91 behind each new high. So that's that one. Currently in profit, but only a little bit. Now, the livestock ETF, which is ticker symbol COW. Okay, so we bought this one at 27.69, and again this was in here. Again, this is a trend following trade, so $1,500 risk on the trade, or should I say 1.5%. You know, you can scale the amount you want to risk depending on what your own account size is. So it's 1.5% risk though. Pretty much breaking even at the moment. We did move up slightly after our entry, but again we're just trailing the stop 79 cents away from new highs. So at the moment that's kind of down in this region here. Kingfisher. Now, Kingfisher, this is a counter trend trade. So again, the rules you can find on my strategy videos. But we got long in here. We didn't wait for any particular type of pattern. We just saw this as a statistically significant move to the downside, which, you know, according to our computer model, is ready to bounce. So we got long in at 363. Our initial stop loss down here at 347, and you can see our profit targets here and here. We close half at this profit target, which is 379, and we close the second half at 387. Lakes. Now this is one of the two losing trades we're currently in. So as you can see, one of the downsides of a trend following model is you can, you know, this will happen, and it'll happen quite frequently in fact. You'll actually buy the absolute high. So this is exactly what I've done here. I've bought it at 430. Now the good thing is if we have a look at the weekly chart, you can see, and if you go back amongst my blogs, this is a multi-year rounding bottom formation which we got long on this trade, and because it's such a cheap stock, we've actually given it a very wide stop loss in percentage terms. So it's only $1.22, but in percentage terms, you know, that's a large fall for us to be stopped out at that. And we're just trailing that stop up, $1.22 behind each new high. Okay, so that was Lakes Entertainment, which is ticker symbol LAKO. Now, the other day we got long crude oil. Again, counter trend model, our entry 34.70, profit target 37.40, second target 38.75. Our stop loss is down here at 32. We've been in the trade about 4 days. Actually looked very nice. Straight after the initial entry. So as you can see, the entry was based upon this inside kind of like a Morningstar doji formation. So we got long. We did move to the upside, but we're now just pretty much breaking even on the trade. Now this was a lovely trade, and I'm expecting more upside here. Now we bought it at 54. Stop loss down here 48.53. So we bought it here. Again, we didn't wait for a signal particularly. We bought it at a limit order 54 because we, again, our computer model told us this was too much of a fast move to the downside. So what happened the next day? Well, actually, we formed a kicker signal. We gapped up significantly, and it only took us a day to hit our first profit target, which was at 59.47. So we've closed half the trade there. We've taken $500, and we're just running the second half, and we're hoping to get to 62.23. I'm quietly confident that's going to happen, just because I do particularly like these kicker signals. Okay, Transglobe Energy Corporation. Again, trend following model. So we bought it here on the 3rd at, I forget now, 8.33. That's it. There we go. Here are our orders. So we bought it for 8.33 in here by the blue line. Our initial stop was down at 7.45. But we're trailing that 88 cents behind each new high. So the second day we actually made 10% up move. And this is one of the beauties of trend following strategies. You know, you can catch these moves. The trick with trend following models is just make sure that they guarantee you to participate in any trend. That's all you can do. Okay, the rest is all about risk management. So we got long, we moved up 10%, so our stop loss now is actually trailing up behind, and without gapping away from it, we're guaranteed a profit on that trade, but hopefully we're going to see more upside movement. The United States Gasoline Fund, so the gasoline ETF, again, counter trend trade. We've come back too far, too fast. We bought it in here, 55.72. We've already closed half the position because we hit our first profit target, so it's another $500 banked, and we are running the second half. 58.68 is the second profit target. And the last trade we're currently in, this was a pure hedge. Slightly regretting I took it now, in fact, because you know, we had that big move down in the equity indices a couple of days ago on this, you know, the ludicrous situation with the US government, the whole debt ceiling, Obamacare nonsense, which the Republicans are basically screwing everybody over with. But that, you know, I'll leave politics to one side. So we got in long, sorry, we shorted the market 64.70, and again, as I say, so we shorted it because if you notice, we were long everything else. We needed some sort of hedge in case the market fell off steeper. Now, as it turns out, the market rallied the day after the big fall. So I might have been premature in looking for shorts, but you know, it's fine. It'll smooth my volatility. It was nice having the comfort knowing if we did fall harder, I fancied this to fall with the market quite fast, because again we had a kicker symbol, in fact, kicker signal rather, to the downside in this particular stock, which is Valspar Corporation, VAL. Anyway, so we got short at 64.70, our stop loss is at 67.30, and we just had one profit target because this was a short. We don't like to stay in short trades for long, and the profit target was down here at $60.80. Now, as you can see, we're losing in this trade at the moment. So there we go, that's about it. So we're currently in 1, 2, 3, 4, 5, 6, 7, 8. Sorry, we are in 9. We're in 10 positions. 10 positions, 2 of which are losing. So we're losing in Valspar and we are losing in LACO. The rest of the positions are doing pretty well. As you know, as I showed you this earlier, I only list closed trades here, so I don't list profits, paper profits or paper losses. At the moment, we're actually we're net profitable on all our open trades, but you know, anything can happen. That could change in a flash. But there we go. So that is the review of where we currently stand. Those of you who want to follow me in on all of the trades I place, just as I say, come to the blog, which is www.backtestwizard.com. Or you can follow me on Twitter at backtest_wizard. Have a great day, best of luck with your trading, and I will speak to you soon. Take care.